So welcome again to another Monday Night Futures. For today, again, I'm going to start with a disclaimer. As always, not an expert, not financial advice, and we're going to trade your funds at your own risk. So I'm going to put that out there. For today, I wanted to go through the top-down analysis. Since last week we did liquidity, and that was like learning how to when we're taking liquidity and how you know it's being taken and how you would be able to enter based off of that, and also when the move is ending and knowing that it's ending. So that's the next step after that is learning how to apply, because just having that is not enough. You need to know the bigger picture in order to be able to trade the smaller picture. Okay, so essentially what is top-down analysis, why do we need it, and how do we do it? So those are the three that I'll be covering. What is top-down analysis? It's basically, essentially is what it is. You're starting with the higher time frames and you are working your way down. And that can be, depending on what your trading style is, it can be anywhere from, somebody who wants to trade like a year or 2 years, they would start with that time frame, and then they would look for entries off of the monthly, weekly, and daily. So it just depends on what your frame of reference is and what you're wanting to trade. Since for futures, majority of people do not hold for a great length of time, I'll be focusing on the day trading aspect of it. And the next question was, why do we need to do top-down analysis? And basically, essentially it's like the higher time frame is the leader. It's the leader of the pack. So you have the higher time frame, and then all the lower time frames will follow essentially what that higher time frame is doing. So it is you need to know what's happening. No matter what time frame you're trading on, you need to know what the time frame above you or beyond, what that time frame is doing. If it has taken liquidity, where levels would be, where targets would be. That's why it's so very important to not just be on one time frame. Even if you're trading on the one, you need to at least have an understanding of where the bigger picture is. Okay, the how. So since we're day trading futures predominantly, the futures moves in the weekly. Like we're looking at the weekly range on futures. Because since we're day trading, that's what you want to be able to. If you can manage to know and grasp what the weekly move is, that's what you need. That's essentially what you're going to be working with. So from the weekly, you go down to the daily. And the daily is basically you go through every single day. You are looking at marking out highs and lows and where, in terms of the weekly, where are we? And I'm going to show how exactly we do this step by step. Number 3, we have a Globex overnight session. That's from 1800, which is 6 o'clock, to 9:30 a.m. New York time. And the importance of that is because we need to know what Asia and London, what they are doing. Are they consolidating? Are they are they bullish? Are they bearish? What is their bias and what are they doing? So that's important to understand where they are in terms of the weekly and daily, because that will impact how we trade during the New York session. So that's why marking those levels are very important. And the highest time frame for actually the day trading part is the 15-minute. That's where you will get your most important levels of knowing if we are having a break of structure where we are, we're reversing, and where you would want to get, like if you want to get closer targets and you're not comfortable for holding, those are...
Connected or out?
Hello?
She's back.
Hey.
Hi.
Oh, is it disconnected?
Yeah, the
Oh.
You out on accident.
5 seconds, like 20 seconds ago.
Oh, okay. All right. So you guys heard the overnight session part?
Yeah, but
Okay.
the stream stopped, so you can...
Okay, let me go back.
restart.
Okay, let me restart it. Okay, where am I? Okay, let's go back here. I don't know why it randomly just does that. Why it kicks me out for some reason. Okay, we're gonna go, let's do the PowerPoint again and then go live and okay. So overnight Globex session and then the last time for day trading, then 15-minute. So the 15-minute in terms of swing highs, swing lows, knowing, especially if at the open, when we open, really seeing where those swing highs and swing lows are and if we're taking liquidity. To see if we're going to take liquidity and continue in the direction of the trend or reverse. Okay, so and then this is the how. So this is what I look at every week. And I'm going to do ES because I don't trade. I haven't been trading ES as much, but it's actually been a little bit more clean than NQ last week and even today, just in terms of directionally, because I think NQ just moved so much. So ES is just a cleaner way of showing on the charts. And I like to also chart it to show the analysis because I don't trade it. So I haven't actually been on the trade, but it shows the effectiveness of marking out the levels and seeing how price reacts to the levels. So based on the weekly, we're making, we're bullish and we're in an uptrend. So in the uptrend on the weekly, you can see here we have consolidation this is last week's chart. So the prior week we had consolidation and we took liquidity from the downside and then we pushed up. So that is an important level to mark out because it took the liquidity. So if price wants to revisit that area, it could be potentially an area that we would, possibly reverse at. So, or that we could come down, touch it, and then go back to the upside. So that would be a potential target on the weekly. In terms of upside, because we are bullish and we don't know. Sorry, go ahead.
Dina,
Yeah.
can you point out as you're going through because
Yeah,
your
can you see
screen
my mouse or the
I
cursor?
can't see your mouse.
No.
No. Oh,
No.
shoot. I don't know why. Okay.
Are you
Dina,
scaling?
remember last time you had to share the?
Yeah, let me
share
do.
screen?
Okay, let me go back and do that. Sorry, guys. Let me.
No, you're all good. Thank
Okay.
you, Dina.
All right. Let me do share screen.
Thank you for moving.
And let's do. Okay, instead of applications, let me do screens. And then I want to do. Okay, maybe if I minimize the. Oh no, if I minimize that, everything goes away because we don't want that. All right, I'm gonna do screen 1 again and see if this works. Okay, I'm gonna do screen 1. I'm gonna minimize y'all. Okay, are you seeing my ES chart now?
Yep, and we
Okay.
see your.
And you see my mouse?
Cursor.
Okay, perfect. Okay. Oh, sorry. Okay.
Perfect. Thank
All
you.
right. That was too fast. Okay. So right here, this is the consolidation from the prior week, and then this is a candle that had that big push up from last week. The week before. So I'm showing we're doing hindsight trading right now because that's the only way we can do it, and that's how you learn. So we took out liquidity, and so this is a level of marking out for downside because we don't know what price is going to do, right? So as far as we have a weekly move. So within that week, it's going to either move up, it's going to move down, or it's going to move sideways. So if it moves down, this would be the level you would mark on the downside because of the fact that it took liquidity and we are still bullish and we have targets to the upside. So because the bias is still to the upside because we haven't had a break of structure to the downside, there's no reason for us to be going to the downside. For that reason, it could come down and then reverse to the upside. So this would be a level to mark out. This is why I have this marked out on my chart. And then for the upside targets, the reason this is the most obvious one target that you would want to mark out because it's a swing high, right? We have this, it has candles on either side of it that are lower. It's a pivot target. If you take the liquidity from this, then this entire range is kind of balanced out essentially. So if it takes it out and then we reverse back down, you need to see if we're going to continue back to the upside. So that's where this upper target comes from and why that would just be an obvious target. But these targets down here, if you look at the chart in the weekly, price really loves this level. And you want to make note of those levels that has multiple touches. The more touches on the higher time frames, the more you have confluence that it wants to go back there. It it's a very strong magnetic pull for price to get back to that level. So, and then we've had 1, 2, 3 wicks. This is where we reversed and we went down. So and then that's where you basically talk your way through. If we made a lower high here, we took liquidity from here, we made a lower high here, and then we came down. In order for us to continue to the upside, we need to take this candle wick out and continue back up. So it doesn't need to do it this week, and it doesn't need to hit the higher target. But that would be the reasoning for having both these targets. So if it takes this out, then your next target would be this upper target. Okay. So, and then that's the weekly, where you map out the weekly. And you have those on your levels, so you don't have to constantly keep switching when you're on the smaller time frames. That way you know where we're going. Then you're like, okay, it's marked out. I know where we're going. My chart is framed, so to speak. Okay, and then now we go to the daily. And then the daily is the one that changes every single day. Every single day, it will, obviously, because we have a new daily candle. So this is Friday's candle. And then we see it had, we took out the upside here. And then you just essentially mark out the prior day high, mark out the prior day low. This candle alone is not enough information to take a trade on, because this candle looks like, just based on candle, like if you're looking at the candle, you immediately want to go, like it wants to push down, because it looks like sellers are pushing this candle to the downside. So if you look at the candle and you're going to be like, okay, I want to put a entry here to go short, and then, take profits here and leave my stop there. I mean, that can be done. You can do that, but it's not enough information. You need the overnight Asia session to give you in order to know essentially the bias and have the greater information, I guess is the best way to put it. Okay, so now we go down to the 15-minute. We marked out prior day high, we marked out prior day low, and this line right here is where we opened on Sunday night, 1800, for the overnight session for Globex. And then this line right here is right before the New York session officially opens. Pre-market is at 8:30 over here, but the official opening is at 9:30. So based on this, we look at what did the overnight session do. We can see that it didn't take out. It did take out the low of the day. So we are like essentially in strat terms, we are 2 down on the day. So so it took 2 down in the day. And then you look at to see what the candle structure is. If it is bullish or is it bearish? If there is a predominant buying or is there predominant selling? And that's what you want to make note of for the overnight session. You don't want to just be like, okay, it's buying, so I'm going to go in and go, be bullish, and that's it. You want to see, okay, it's making, same thing, you just look at the structure. It makes higher highs, and then when it comes down, where does it come down to? And this is very important to see that this is the low of the overnight session. When it trades down, even at right before pre-market, it doesn't break the lows. And that's important because we know that if we're not breaking those lows and we're making overall in the larger time frame, we're making those higher lows, we are more likely to go to the upside, especially since we have these upside levels. So then that's where you look at the analysis, and then you wait for the open to see will it take out the high of Globex. That's your first target and your first stepping stone, essentially. In order to get to the higher target, you have to look for it to get through these levels. And the 15-minute is those levels. Those are the levels that I'll call out in voice. I'll say, okay, we need to go through the Globex highs, and we need to get a push above it for continuation. And then you want to get through these swing highs on the left-hand side. So you would want to get through this. You would want to get through this. If you're not comfortable holding to the target up here, thinking, okay, are we really going to get all the way over here? We're 2 down on the day. It tells us that, if we have time frame, it's already down on the day. Is it really going to go all the way up here? Do I really want to take that chance? If we do push, then this is beautiful. I mean, that's still a beautiful trade if you mark this out and this out as potential targets, provided we do push beyond Globex. You have to take this out and have the continuation. And then my next slide. Okay. This is okay. So this is June. So this was the where we went. We did push up. We took out the Globex highs, and then it kept going to prior day. It took all day. So if you were to just aim for this target or this target, you would have been out of the trade much sooner. So it does go there, and there's no invalidation of the trend at any point because these swing lows are still intact. So if you keep the 15, that's why keeping the 15-minute and the higher time frames up is very important if you want to see the trend. That will show you if we're having, like Abby was showing you, like break of structure. If we get a swing low here, if we get this liquidity here, as we came down, we took liquidity, we went up, this candle right here would need to come with force and take this out and then continue down. If it doesn't do that, then the trend is still valid to the upside. So this was Monday, and then Tuesday, and then essentially you just do that for each day. So you go through that was Monday, and then we took out that first target, we still have that higher target. And this is you mark out the high and low of the prior day. I think I accidentally marked out this one, but you mark out, same process. You mark out the high and low of the prior day, and you're still looking to see if these targets are being taken out. Okay, and so this is, again, the overnight session on the 15-minute, and we have, basically, the overnight session just consolidated. It didn't do anything on the overnight session, right? So we just traded sideways. So when you have a sideways, there's no bias, right? You just there didn't do anything essentially. So then you really do have to wait. This is one where you really do wait to see, okay, we are consolidating. We have a swing low here, and then we need to see is it going to get a candle close underneath here, and then are we going to continue to the downside? This candle right here is still before the New York session officially opens. The New York session officially opens right here at this line right here. So this candle is prior to the open of the session. So this has made a lower low here. So we are this candle looks very bearish. So based on this and just looking at this, you're like, oh, we're going down. We took out the first target. We wanted to get downside. The downside looks really good. We're going down. And that's where you have to wait for confirmation that we are actually taking out and having a push down beyond this level, and not just entering because you see big red candles. It's just the emotional, not having, holding through the emotions and just waiting, because in order for if price does break this level, this downtrend is invalidated. Then we have that break of structure, and you just need that continuation to the upside. So, okay, that was it. And then I'm going to go switch to my live charts so that y'all can see. Okay, so this was Tuesday. So, and Tuesday, for any of y'all who traded it, it was glorious, right? So it just went straight to the target. There was no very little pullback and just a little bit consolidation, and it went straight there. So the Tuesday was easy. In that sense, if you were holding through and you just keep your 15-minute up and you're watching your swing lows, there was no reason to get out of this until it got up to this point, and then you just want to see, is it gonna? I'm gonna reduce the speed here. Okay, and then we just need to see, is it taking out? Is there any reason to get out of the trade? Okay. So the very first indication of getting out is we have, like I was saying last week, it took out liquidity here. So number one, we've taken out the target. We had the lower target. This is our higher target. It took out the target on the pivot. So if we look at the weekly, I'm going to go to the weekly. Okay. So this is the weekly. It took out the target over here. It didn't take out our pivot target, but it took out a big target to this side. So we have, okay. So we did take out the target. So now we have that target taken out. The larger upper target is a major area of target. And that, it's 46.31. That's a huge move and for ES to get all the way up there. And that's where we want it to go. But on a weekly basis, I mean, that's ideal. So that's why the levels are marked. That if we do get a big move, it's not impossible. I mean, it does crazy moves, so it's not beyond the possibility. But in terms of weekly, typically on a weekly move, getting that first target is where you want to, low-hanging fruit. So then we had that first, we have the liquidity taken, and then we have the pushing down, and then you need that, you want to make sure that we are actually going down with an energetic push down. And this is still during New York session. I mean, this is after market close, like this is the after hours trading, but that's what you want to see. Is it going to push down and through? So it just kind of did sideways. So this one, you can't, just because it took liquidity and we are going lower, just based on this alone is not enough to assume that we are going to be bearish on the next day. That's why each day you have to have the confirmation of looking at what is the overnight session doing, what is in terms of the daily, where are we, and at the open, what is the structure at the open. So if you take out the prior day low, if we take out global, you need candles to have continuation and confirmation for downside and upside. So same thing here, we would go to, sometimes it messes up if I do back and forth on time frames. So let's see, take it out. And then it's just essentially the same process every single day. So I'm going to forward to past, unless you guys want me to do you want me to do every day for last week? I can do that if you want. But it's essentially the same process every single day, where you're just looking at the daily levels, and based off of that, you're looking at your Globex. What did it do overnight session, and where are we in terms of the week, in terms of what our weekly targets are? Where are we in terms of that? I do want to show why I was okay. Let me show. This is Tuesday's candle. Okay, I'm going to do Wednesday's. Okay, this is Wednesday's candle. Okay, I want to show Wednesday and why I was so bearish, essentially, on Thursday. Okay, so we're going to mark out Wednesday's candle high. Okay, so I'm going to put the lipstick on, prior day high. Put the lipstick on here, prior day low, as ICT likes to say. Okay, so we have that for the Wednesday prior to candle. And then we still have our upside targets, downside targets. So, okay, the other thing, for the daily, we have this target way down here. But because if we're up here for the daily. And then this is where you want to see, we're on the daily, I want to see intermediately within this frame, where would a potential target be? Where would liquidity want to, what would it gravitate towards, essentially? And since, we're thinking upside, essentially, because we don't have any reason not to. We do have it making a wick here and taking liquidity, and we don't have any break of structure, there's no reason to assume we're just going to plummet. So based on the fact that we do not want ES coming all the way down to 4419.5, we need to have a more realistic target within this time frame. So that's where you look at the daily and what your where would the not ideal, but where would price most likely gravitate towards. So if you look here, we have here where it took liquidity here and then we pushed back up. So any areas where liquidity was taken, that's an area where you want to mark out as an area that we could revisit in order to come down and reverse from. So if we went there once, there's a chance we could go there again, and we've seen that happen lots of times. Okay, so that would be target 1 if we get there, and then target 2, and why I was calling out the other targets was because, like you know how Abby was going through in his thing where resistance becomes support. These wicks right here, that is what they are. They took liquidity here, so this would be a target also if we continued to the downside. So then you just mark those out. So if we do come down, we would want it to go to here and then potentially here. And we still have our upside target. If we do go up, this is where we want to go to for our next target. Okay, so then we are going to go to the 15-minute. Okay, so we have, I'm going to mark out. Okay, this is the overnight session starts here. Overnight session Thursday and here. Okay. So this is, and then we're going to play this for the overnight session. Okay. Okay, let me increase the speed a little bit because this is really slow. Get it a little bit faster. Okay, let's go. Let's see, it's the 8:45. Okay, I'm going to reduce the speed a little bit. Okay. One more candle. Okay, so this is right before we open. Okay, so we had, we had prior day high. This is prior day low. Okay, so again, we're 2 down on the day already. The overnight session, right at open, it opened up, and then Asia went down. We already, like we said, we took out liquidity up there. We're making a lower high here, and then we're coming down. But that's not enough information to assume that we're going to go down. Now, what did overnight session do? Okay, and this is where you analyze what did the overnight session. We took out here. If you look at those levels, it's making every upper candle is a wick. There are no candle closes on the upside. So every swing high is a wick. So you have a wick here, you have a wick here, you have a wick here. These are all wicks. There's nothing bullish in the overnight session at all. Like it's just wicks to the upside. Every time they come up, they sell down. They come up, they sell down. They come up, they sell down. And that in conjunction with the fact that we took out this target here, we have a liquidity. We came down and we made a lower high, and then we'd had a nice push down of displacement before we even closed on the prior day. And Globex followed that. It never took out the break of structure over from the prior day, so there's no nullification for the downside. Everything in this was screaming downside. That's why I was fully on for the downside. But we do have the open, and the open can be manipulative. So you still need to see, okay, where would it invalidate our thesis for no longer being bearish? It would need to take out the swing high on the 15-minute. It would need to come back up, take this out, and continue. If it doesn't do that, then your thesis to the downside would be valid. So then we're going to see what happens. Okay, we wake up. And then this is where it gets you that you need candle closes. So it took out this swing high. That's why when Abby or I say, when we say candle closes, that's what we mean. The wicks are actually confirming the thesis of downside. When you want downside, you want to see a wick pushing up like this. When you are bullish, you want wicks like this, like pushing up. Like these are the wicks that you want to see. The price is like pushing it up. The buyers are so strong that they are not letting the candles come down. So when we have these wicks up here and these wicks up here, that gives you even more conviction of the downside, because even if you put this as your Globex high, this is where we put the Globex high. So it took out Globex. I'm going to take this off for 1 second so y'all can see that. And take this off 1 second. Okay. So what did price do? It came down, it came up, and then it went, and we have a wick at the Globex high. So that right there is your first, it's the confirmation of still the bearish thesis because it took the liquidity. But that's not enough, right? Well, we said we need the confirmation that we are continuing. So then we look to see, and then you have that next, it just goes straight down, and then for the rest of the day, it just, you just have to, you just have to mark out the level. And then I want to show you actually on how, okay, so this is where it can trip up a lot of people. You have, this is the swing high, this is the swing low. The invalidation of the thesis to the downside in order for it to no longer be bullish is you need to have it come back up and take this candle out and push up. If it doesn't do that, it's still bearish. This candle doesn't invalidate the thesis. This is the candle that invalidates the bearish thesis. The reason being is because this is the candle that came down. You need the candle that created the push down to be your invalidation candle. So if you see this, it needs to, that would be the one that needs to be taken out for you to no longer be bearish, for it to be like it would be switching sides essentially. And then it comes up here, and then it just continues back to the downside. Okay, and then we keep pushing down. Okay, so yeah, so basically that's essentially what you're doing for futures. That's what I'm doing every day, and that's what you want to look for. Just mark out those weekly levels, mark out those daily highs and lows, and then you're looking to see what the overnight session is doing. If overnight is choppy and sideways, then you wait for the open and to see if it takes out the swing lows to take liquidity, or do we have closes? And if we do have closes, what is it doing on the opposing side? So if it does have closes, it would need to push up and confirm that this is a bearish candle to the downside, which it did by taking the liquidity here. That was actually confirming that this is a bearish candle, that we are going to the downside. Okay, does that make sense? Any questions, comments? Anybody still there?
Yes, I'm here.
Okay, all right. I was I didn't know if it went on mute or not. I was like, oh, okay, did everyone disappear?
I get sleepy, right, when they don't participate.
Raven, am I boring you?
No, I'm not saying you. When they don't speak, I know that they're shy. Like 2 people express that they're shy, and I need them to know that it's not. So,
Dina, I have a question.
Yeah, go ahead.
So, but I didn't want to interrupt you. It's at the beginning. I think you did Wednesday. If you can go back to that one, please.
On Wednesday?
Wednesday last week, I think.
Yeah. Okay, let's go back to the daily. I'm going to hit replay. And, yeah. Okay, let's get back. Let's get rid of. It's Thursday. Okay. So, okay, so we're going to, let's get rid of these. Okay. So, this is Tuesday's candle. And then.
Yeah. And show the Globex.
Okay, so let me.
After you're done with the setup, yeah.
Okay, let me mark out the high. Let me do per day low. I have way too many things because I need to get rid of some of them. Okay, and then we're gonna go to 15. Okay, and then let's mark out to open. And then this is Wednesday. Okay, we want to do 9:30. Okay.
You said Thursday you were bearish, right?
I was bearish Thursday, yeah.
Right. So.
Okay, so let's see what did overnight do on Wednesday. Because this is Tuesday going into Wednesday before we open. Let's increase the speed a little bit. Okay. 9. Okay, one more candle. Okay, so that's the candle. All right, so this is the Wednesday. Okay, so Wednesday we're going to mark out Globex low, which is approximately here. Yeah. Okay, so that's the Globex close. And then right before open, this is the opening candle. That would be the high. Okay. So we have the low, and then we have prior day high, prior day low. Okay. So right before open, we have so the overnight session traded sideways essentially for most of the night, and then we continued up, came down, took liquidity here, and then we made a little bit of a higher low, came down, again took liquidity here, and then pushed back up. So it's trading upwards. We took at the prior day low right before we put the high, the prior day high. So right at the open, you would want to go based on this, upside would look good because it took liquidity here. It took out this swing high. It took out this swing high. The upside would look good, and we still have targets to the upside. So based on this, yeah, you would want to look for confirmation for trading to the upside. So, but then we need to see how we open. Okay, so then we have, that's a beautiful confirmation for upside. So your thesis was we're going to go upside. Beautiful, went upside. Okay, so now we need continuation because we have our target here. So is it going to get to our target? And that's what you want to see. So we keep continuing. Okay, and so then we need to see, it needs to come, if we're going to continue, we could have consolidation, and then we would need another push up, is what you want to do. You want to make sure that there is nothing that comes below this level right here, because if it comes below that swing low on the 15-minute, it's no longer an uptrend. That would invalidate the thesis, because that would be the break of structure on the 15-minute. And so we want to see what happens. Okay, so then we have that. So we have, this was where you look and see, okay, so this is where we want to go. This is where we're trading, it's Wednesday. It did have a bullish push. We had 2 big days of buying. And that you have to keep all of these in mind. We had Monday trended up. Tuesday majorly trended up. It had a big, beautiful push up with no real pullbacks. Okay, so that was a gorgeous day. When it's not impossible that we would go up because we do have upside, but because it's Tuesday, you have Thursday, it's Wednesday. I tend to look to see if I want real solid confirmation that we're going to go up. So I need, when I see wicks like this, I would be looking to see if we come down, and then, if it takes out levels and continues down. Okay, so then we had equal highs. We had a candle come down, took out this level right here, but we need to see, is it going to come up and make a lower, if it comes up and makes a lower high and then continues down, that's what you want to look for. So it continued back up. So it is,
Has a hot mic.
I'm not sure who that is. Okay. So this one, it was bullish. It took out liquidity. It came down, but it made a lower high. In order for this to truly be a reversal, it would need to have a candle that continues to the downside. As of now, we don't have that. So based on this, you would still go long because there's nothing to invalidate going long. You haven't had an invalidation for any reason. So until you actually get a solid invalidation where it would be like, okay, so that's where, like, you just be marking out the highs and see what price is doing. Because when price is pushing up, it should push up. You should not have areas like here. When we went up, we consolidated and then we pushed up. We consolidated and then we pushed up. It should push, like it should be a big candle push. This is not a big candle push, especially when you have wicks up here. If you get down here and you push below, the bullish trend is definitely broken. But early signs to look for before that is the liquidity here. That you are wicking on these ups, like you have a wick here, you have a wick here. This should not be a wick. If we're continuing back up, this candle should have pushed through and kept going. So the fact that this wicked after here, wicked here, and then we're coming down again is troubling, essentially. It should not be doing that. And then you want to just see what is price going to continue to do. Down, up. Okay, this is, I believe, yeah, this was the open of the session. So I'm going to mark that out. Okay. So, hold on, let me mark that out. My bad. Okay. This is actually the open of the session for the next day. So if you look at the structure, what's happening here? Okay. This candle right here, if we're going to be bullish, it needs to have force behind it. It would need to go through and push back to the upside. So that wick is an early sign that it's not strong enough. It's not doing what it's supposed to be doing. And then you coming down and then you're taking out the lows, but we're not invalidated until this level itself is invalidated, which gets done after the Globex session is what takes that level out. So that's why Wednesday was so challenging because of all this choppiness. It took liquidity here, it came down, it took down there, and then it went back up, and then it went back down. It's choppy. It's not an ideal day to trade. And if you have overnight sessions where this was clean, where you like, okay, it's going to be bullish. If you've had 2 days with big moves and you do see bullishness, you don't want to ideally be holding for a bigger move because we've already had 2 big days of big moves. The likelihood that you're going to get a third day in a row, it would be, it's better to take your profits earlier, essentially, because you've had typically if you've had 2 good days and Wednesday in general is choppy. It's just the way it is for the most part, unless we have it like this Wednesday is with FOMC, so it's going to be insane. But other than that, in general, the rule of thumb is Wednesdays are just choppy. I mean, this is what Wednesdays like to do. They like to go up, go down, and just, if you can find the range within that, this would be the high range, and then this would have been the low range if you could, that you would want to trade within. So once it went up there and came down here, you go long, and then this is where you wouldn't be able to hold to go back up. So it's very tricky to trade this. It's challenging. It's not worth it, essentially. I mean, it's going to give you a headache, and there's so many easier days to trade that this is not worth it. It's better to just, if you are green and you take profits, get out, just get in, get out. And if you see wicks like this, then you want to target the 15-minute swing low.
Why did you pick 586 level?
Which one?
The
580, this one?
Yeah.
Okay, the reason for that is because when we made the uptrend, it took out the swing high, and this is a last swing low on the 15-minute. So this is you have a candle to the left that's higher, a candle to the right that's higher. So every candle, this candle is a candle that was, yeah, it's a swing low, and then every candle after that is bullish. It's just up, 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 up. So in order for the uptrend to be invalidated, this candle needs to be taken out.
Yeah.
Okay. Does anyone else have any other questions, or do you want me to comments? Anything? Does anyone want to talk about anything?
I have a
Yeah, go
I have-
ahead.
So on a different time
Mhm.
frame that had right before the last swing, the last swing low where you have the top, the
Mhm.
ones right before that,
This one right here.
those lows,
Yeah.
Would it be wrong if we were on a different time frame and that was the only low that was showing, and we had that as a target for relative equal lows and didn't see that last swing low?
For downside for it to go to that target. Yeah, I mean the equal lows are also like they're big magnetic poles. So you can have this, but you want to make sure that you're looking at the structure to make sure that it'll give you it'll follow through, because this did follow through. It did come and take it out. It just didn't do it on Wednesday. It did it on Thursday. So this is the target. It hit it, and it did what it was supposed to do, because we had that lower high here, and then we pushed down. So that's absolutely valid. The only thing is, because if it's choppy, that's why the 15-minute is your ideal levels to aim for, like low hanging fruit, essentially. Like ICT teaches with like low hanging fruit. If you want to do levels, the 15-minute will give you a nice target. Especially like on like choppy days like this. This is if you can get from here to here, that's a beautiful trade. That's 4608 to 4590 on ES. It's like 18 points, which is that's great for ES. On a Wednesday, that's chop. If you can manage that, that's awesome.
Okay, appreciate it.
Yeah, of course. Do we have any questions on trading chat? Let me just check. Otherwise, we can call it a night if nobody else has any other questions.
Should I check for you, or are you checking on a different computer?
Oh, I was just checking on my phone.
Oh, on your phone.
Yeah,
Okay.
yeah. Because I don't. Is there any questions on the actual live trading chat? I don't.
I have a question. In my DMs, but you don't need to, like, I'll send it to your DM, but don't just look at it from your phone.
Okay.
One second.
Time that Asia session start, Dina?
6 o'clock.
20 o'clock.
Huh?
Oh.
So,
Go
sorry.
ahead. No. Go ahead.
So, technically, the highest volume comes in at 20 o'clock, which is 8 p.m. But I count it from immediately the Globex open, because that's where Tokyo first opens.
Mhm.
Tokyo is the first stock exchange that opens, and then you get Shanghai with Sydney, and so on, right?
Yeah.
More countries, Singapore, etc. So, the general kill zone highest peak volume, apparently that's agreed on across the community, is 20 o'clock.
Yeah.
So that's from 8 to 2. That's from 8 to London. I mean to London session start, right?
Technically, Asia closes at 12 midnight, which I don't get why. 12, like New York.
That's not very long.
So, yeah, but like, I'll need to double check for you. I've seen T-Trades answer that before. That's why I have it saved. But I'll double check.
All right. So the time when they open up right after like 5 p.m. Central Standard Time, my time.
Yes. Yeah. So 5 to 8:30 is Central Time.
Right. They don't. So that session, they don't have a title for that session.
I just Globex overnight.
Globex open.
Yeah.
Okay.
Technically, it is still part of Tokyo's pre-market, right? The minute that Globex opens, that's Tokyo's pre-market. 30 minutes later, it opens up, but then you have still Shanghai's time zone is different, and Sydney, it picks up basically later. So, and then you get Singapore, and I'm forgetting other countries, but the first one is going to be Tokyo.
Mhm.
Oh,
All right. Well, if anyone has any questions, I guess DM me or if.
Dina,
Yeah. Go ahead. Sorry.
Yeah.
right.
well,
You mentioned earlier at the start of the lesson, you mentioned something about Asia. What do you want to watch out for in Asia?
I just want to see. So this is what I consider like the Asia, the overnight session. I look to see how it's trading and how what did the London when London opened at the 2 o'clock candle right here. What did it do in terms of prior to that? So this one, London will be the big move in the overnight session based on what after the open, because the Tokyo, there's not much volume there. It tends to just trade sideways. It doesn't really have a big move, except for days that we have if it's going to be trending. In those days, you can have a bigger move. But for the most part, when London opens at 2 a.m. New York time, that's when you want to see what are they wanting to do. Are they wanting to buy it up, or are they wanting to sell it, or are they wanting to trade sideways? So that's where I look to see, okay, what did the overnight session? So this would like to see where are we in terms of, because they are still trading when we're open. When we open, London is still trading. London doesn't stop trading till I believe lunchtime. So the people who are here are still here when we open. So if they bought it here, the higher likelihood is they will want, if they did it here and pushed it up, then it's higher likelihood that they'll want to continue doing that when they open for New York, because they're still in it at this point. Does that make sense?
So,
Yeah, thank you.
Okay, you're welcome.
Piggy, to back up what Dina said, Asia Shanghai index will have a lot more volume than New York, than U.S. markets, right? ES5, ES, which is the S&P 500 futures, as well as Nasdaq NQ. Those are going to have less volume in Asia more often than not. Less movement, less price action moving around. But the Shanghai index is like what people usually, let's say, look to trade, for example, at that time, because of course it's the primary index for the Asia markets. And just to kind of like clarify, right? It's not the only thing you can trade, for example, but just to put that perspective, for U.S. markets, it makes sense that the Asia markets don't trade with the highest volume. And if you use also the TFO ticker, the TFO indicator, that
The one
draws
that
the sessions, yeah,
I don't think I looked.
it can show you a lot of like how price moves. Typically, more often than not, Asia is more muted. I got a little comment now.
Dang, he has a lot. I haven't tried out his indicators. It's a lot.
Did you get my DM? There's
Uh,
another
oh,
guy
let me
sending a DM now.
check.
Sorry, Raven, what do you mean by TFO?
Oh, this is
Oh,
TFO.
sorry.
It's a person who creates indicators.
It's a person like a friend of DinaTradez. He is I guess, developer, and he made a few indicators. His nickname is TFO. Long name is Trade for Opportunity. And the indicator that he has is a really good case study for understanding different price action that occurs in the markets across different time zones. Also, we got this comment in your DMs, Dina, as well. Somebody saying the world stock market map shows the current open, close, holiday, etc. Technically, London does take a little tea break. I think 1 to 2 hours. I don't know how long it is, but
Dina or Raven, what propelled you guys kind of to the next level of understanding the charts? Like, how did it kind of all come together for you? Because both of you seem to have made quite a bit of progress in the last 6 months.
I think it's just screen time for me, and just like analyzing, back testing. I will back test every single day. I'll chart back every single day, and I will go down. What did the 15-minute do? What did the 5-minute do? In terms of structure, what did the 1 minute do in terms of structure, and that's how I would just like drill down and just think, okay, and back testing it over and over, and just like you just really drilling it in live trading, and just going back over all the charts, like where did I go in.
In live trading, do you mean that like my point is that I made the most amount of confidence in learning and knowledge, not trading my account. It was more marking up the charts first and then paper trading it, repeating an account multiple times, and then like taking an eval live, right?
And I'm one of those odd people. I don't like paper trading because I feel like it completely takes the emotion out of it. And whenever I live trade, it's a completely different feeling for me.
I really think you could still benefit from paper trading. How? By putting an account that is worth $3,000, right? Reset that and really try to actually grow it. And if you can double it from 3,000 to 6,000 or 5,000, for example, do it again, right? But before even that, like, I think that a lot of people feel like they want to test out something just on paper. That stage should come later, after you have, I guess, studied the charts just by marking, not even paper trading, not even trading live funds, by actually plotting lines.
But what I'm saying is, I can trade a paper account all day long and make tons of money. But when it comes to actually trading live, it just whatever. It's a different sensation to me. It's a different feeling. So
it's supposed to be, because
it is. Well, that's true. So I tend to react differently than I would if I were in a paper account. Paper, you always know it's paper.
Does that mean that for paper you're profitable? And I said that to Stradalorian. Stradalorian was here for a while, and that's when he told me,
I'm gonna go ahead and
if you are profitable on paper, right, but you can't be on real funds, have you considered sizing down? Because the emotion is what tries to affect you. And so getting sized down enough to close to not almost feeling anything. And T-Trades wrote it, and we pinned it also. Size down enough to a point. He actually wrote it down to Ryan B. Enough to a point where even winning does not affect you emotionally, meaning even winning can't give you a high excitement, because that's what it's supposed to be, right? You're supposed to be like mechanical, methodical, non-emotional. That's how bots trade, and that's how bots can outtrade us humans. So many things can influence, our perspective. Somebody can say one word or sneeze and it affects our bodies, right? But a bot won't, in that sense. But in that case, I really think that what Stradalorian said back in January to me in February, and then T-Trade said it again to Ryan B, you size down enough to where it almost feels like paper. If it's too little, maybe 1 micro is too little, maybe do two micros, right? And then you'll find your groove on position sizing enough there. But then the opposite, like the opposite of that, is actually going 1 mini, right? 10 micros, 20 micros. You want price to go there because you really want to win that trade, but then you're not comfortable sitting through 10 points of a stop loss, or putting that stop loss there 10 points away, and you see it come down, especially on NQ, pull down 5, 7 points, only to go back up. And so that uncomfortableness comes with size. Less size, I believe, gets you closer to the emotion, the low emotion, I guess, of paper. That's how Stradalorian explained it. That's how T-Trades explained it to me. That's what worked. But even prior to that, I actually tried paper trading. I tried live first. I tried eval second. I tried paper third. And then I gave up. Like, I lost hope because I lost so much money by October, that when I was broke, Javi saw my bank account. like logged in front of him. $80. I almost couldn't afford. I actually couldn't afford to pay AX. I had to make a decision. Hey, should I buy an eval? Do I pay for TradingView? At that point, I was like, okay, I need to now study because like clearly I've been trying to grow it. It hasn't. This is my little thingy, my little journey. And it came to a point where I started just marking the lipstick that Dina was saying. Why is price breaking there? Why is price rejecting there? Why is price only wicking there? Right? And then you
Right.
see it shifting in structure. Doing that over and over and over and over and over. I swear to God, like it was just eye-opening. When I had no more risk to open, I couldn't even afford risk.
So Dina,
That's my
what was
story.
it for you?
Yeah, I mean, it's basically really you just like I said, the screen time, lots and lots of screen time. You have to obviously put in the screen time, and I have the same thing. I understand where you're coming from as far as like paper trading, where it's hard to be emotionally involved when like it's not real, right? You don't have
Yes.
that emotional attachment. So I understand that. That's why I started. That's why I liked the evals and the prop firm so much, because gave me the ability to have the emotional feeling of trading without having such a high risk of using all my funds. So I could more clearly see what was happening on the charts and not worry about having such a large drawdown against me. Because even if you're doing a 25K, eval, it's still the drawdown is 1500. And 1500, you should be able to comfortably trade one micro without freaking out with that drawdown. One micro, you should be able to see the charts clearly, look at the structure, get in, and be able to hold through until either it hits your target or it invalidates your thesis, one or the other. And if you are having an emotional reaction, even trading on an eval, you are sizing too high.
Okay.
That's a big thing. So if you are getting there and you are seeing dollar signs, you're sizing too high. If you are shaking and freaking out about what the next candle is doing, you're sizing too high. If you start praying in the middle of a thing, you're sizing too high. I mean, any of those things there, you are sizing too high. And you need to immediately, it doesn't matter what the chart is doing, you have to immediately close down the position, flatten it. It doesn't matter if it goes on if it goes in the direction that you want it to go, it's worse because it will enforce the bad habit of sizing up.
Yep.
And you don't want that's like the worst thing that could happen.
We
Because
got high. We got high last year on that.
Yep, we
Right?
did. And
We really
so,
got
yeah.
high. We got addicted. It was wrong.
Well, I know, and that's why we're asking for your experience,
Yeah.
because you guys have kind of come through and made it out the other side.
Yeah. And I mean, it's like, I know it's not the sexiest and it's boring, but it really is the consistency. It really is just more the focusing on I mean, it's cliche, it's a process. It really is a process. You have to really just love the charts and love seeing how the charts are moving, and the money is kind of secondary. That's what it should be. If you're focusing on getting the next payout or when am I going to get paid, you won't see the charts. You won't be able to analyze.
Oh, and it can backfire too. It can become an obstacle because you're pressuring it.
Exactly.
You're actually putting emotion affecting decisions instead of ration. And so you are right. You're absolutely right. The profits, the payouts, the money shouldn't be the primary focus. It's on the chart. I don't get in a chart trade. Sorry, I don't get a trade looking at a chart saying I'm gonna make $200 out of this trade. I just look at what the target is. If the risk is small enough and I can see it going, green to the green risk to reward tool, whatever, is much bigger, at least two to one than my risk. I just put on normal size. I don't even know how much the profit is going to be. It should be based on that, and that's what Power Trades taught us last year. Goals, daily goals. Sometimes you're not going to reach that, and then what's going to happen, right?
Yeah.
We understand that days are not going to all be green, but a small sample data of how much profit I made in the last month or whatever is not enough to to really give a sample size of true back testing, and why he uses the Monte Carlo, but it's not important for now. Daily goals can actually skew it, right? The pressure of like, oh, if I can make this, I should get this by August or September. That those, at least in my experience, have just purely been obstacles, and I'm not the only one.
Yeah, I completely agree. And the way, I mean, like even with evals and prop firms, it's just you want to not look at the daily, look at the very most the weekly. And that was like I had a session with ADEX, and because it was just like I would, it's like you would get to a certain level, and there was a certain point where it would be like beyond getting to that point, it was really difficult for me. I had a hard time accepting that much green. And then it's like you feel like you're self-sabotaging. And so I did a one-on-one with ADEX, and he's like, don't look at the daily P&L. He's like, you need to not look at that. And like, I don't look at it when I'm trading, but I used to look at it on the daily. And then he's like, don't do that. Just look at it at most once a week. At the very most, don't, once a week. And if you can go longer, that's even better. That's like even, the longer you can go without seeing what your P&L is, the more successful and consistent you will be, because it will not be about the dollar signs. It'll be about the charts and the process.
Reading the charts correctly and realizing that you've done that. Okay.
Couldn't have said
so
that
does
any
make
better
sense.
myself.
I've been doing
Thank you, AdexTrades.
I need to make so much money per day kind of thing, and I think it's backfiring.
Yeah.
Say that again. Sorry.
You can.
I've been focused on I need to make $200 a day in this account, and I need to scrap that and just work more on the process. And I
Yeah.
do study the charts like you guys talk, but I think it's something that just takes months to really master.
Which account are you trying to make $200 a day? Is it personal or eval?
In my evals.
What's pressuring you to reach 200 a day? If those are apexes, they're 80% off next month, and the balance rolls over. I think there's a
No, I know,
like.
but
Oh.
I'm a get it done person.
Mm.
So
Oh, got it.
Yeah.
and
So
I've always passed them quickly.
Mm.
So I just set that out. But in some I've done well in, and other accounts are behind. So but I need to let go of the daily tally.
It's
Yeah.
like honestly so Dina, for example, has actually taken a different approach on the daily tally. So she has multiple accounts. So without the copier, for example, right? Meaning you do
I
one
don't
and then
use the copier.
okay, so are you trying to make 200 per account per day on each? That's a lot of pressure. I think. Sorry, is that correct, Dina?
Yeah. I mean, and the thing is, the dollar. It depends on the personality. We're not gonna say a blanket statement that for some people it works really well. Like they are able to have a goal of they're gonna do this much and then they're gonna stop. Because they analyze the charts and they just wait for their specific setup. So in that situation, having like an actual dollar amount goal is not necessarily a bad thing, because they understand the charts enough to know that this is my setup. I'm going to wait for this setup to form, and only when this setup forms will I take the trade. And when it does go, I will get out when it hits this dollar sign. I don't care if it gets to my target. I don't care if it gets beyond my target. I just want to get to this dollar sign. And they will set it, and that's what they will get out at. And they will build that consistency and get that daily win. Because getting those daily wins, you want to be able to have those wins every single day to be able to grow. And it's really important. But the downside is if you are just aiming for a dollar amount, not having a setup, and just coming in, just wanting desperately to make that amount, regardless of what the charts are doing, that you just are focused on, I have to make the 200, I have to make the 150, I have to make the 100. In that situation, it will work against you.
Agreed.
See, so for that, you want to focus more on looking at where the chart, because the P&L will take care of itself. It will take care of itself. It may not happen as quickly as you necessarily want, but you will get there. And it will actually, if you let seeing the P&L, you will actually get there faster than obsessing about it.
I agree.
Because you'll be able to hold through on moves that you wouldn't have been able to hold through before, because you're not afraid of what your P&L is doing. Like for instance, on here, let me share my screen right now, real quick.
Sorry, just a quick interruption.
Mhm.
Also, Martha, this is like from the perspective of talking about market structure. Forget about the name of ICT, right? SMC. This is just market structure in the sense of like we wait for liquidity, we wait for this. There are so many different ways of doing it, right? Using EMAs, Fibonacci's, that you can probably find different setups. But what I guess we have, let's say, done more recently and focused on and have found success in is at least what, following market structure, right? We don't really use indicators. There's no shame in that, obviously. But the whole point is you might find a lot more setups if you trade maybe support and resistance, right? A lot more setups, not necessarily profitable ones, but maybe EMAs, maybe fibs. And so at least in how, let's say, I want to trade, I'm trying to do the 1 to 2 trades a day where it's highly probable, and it really focuses on the bigger liquidity, because that's where the money is resting. Once they steal that buy stop, sell stop, they're going to move aggressively. They're going to displace, and that's what I want to see. That footprint. So that's my style. But let's say somebody else that can use EMAs, start scalping, right, on smaller time frames, and find more setups for like little 5, 10 tick runs and so on. I can teach you, Martha, how to scalp using the 15-second time frame.
Okay.
But you must size down, and I can show it to you on NQ. But
Okay.
that's
Okay. Well, look, I know Dina needs to go and do some other things.
Yeah.
Thank you very much.
You're welcome. I just wanted to show this one as an example of holding through. So this is a beautiful day on the 1 minute where you would have the lower high and we would go down, and holding through this and coming down where you're holding through all of this chop. If you're looking at your P&L and seeing all of this, it can be difficult to hold through because this is a very long time frame to hold through all of this. Because your invalidation and this wick right here would be where you're like, oh, we're done. It's done. I'm out. I can't take it anymore. I'm out, right? But it's just, it wicks up. Whereas if you're looking at the charts, that wick is what you want to see. You want it to come up, take that liquidity, and then go in your direction. So that's where not watching the P&L, you are able to see this and be able to, like we say, trade the chart so that you can take in that full move, whereas you would have possibly gotten out sooner if you weren't, aiming for just the dollar amount, if that, makes sense.
Right. Yes. Okay. Thanks, Dina and
You're
Raymond.
welcome. Okay, guys, so that was a long time. So,
Dina, can I
You're
ask my
welcome.
question?
Yeah.
I've been waiting for 30 minutes.
oh, yeah, sorry, go ahead.
So back to Thursday.
Mhm.
Is 4544 a target? Thursday looking back, because you said Thursday you were bearish,
Let's see, daily.
and that is a like almost 45 points.
Okay.
And can I take the fair value gaps as a target instead? I mean, it did not reach that level, by the way.
Okay, I'm just gonna let's remove these. Okay. So this is Wednesday, the Thursday. Which day you wanted to go over Thursday?
So Thursday was going down. Let's say you nailed it. You're bearish, and then it went down. What are my targets? Basically, that's the question.
Oh, okay. So what would your targets be based on the daily? Okay.
I have
Fair value gaps are targets, correct, by the way.
Yeah,
Yeah.
they can be, because that's where you would look for the opposing side to enter, right? So that's why it would be where you would see, okay, if we get there, the reaction that you're getting once you reach that area. And that's where, if you are like, especially the higher the time frame, the stronger the participant. So this would be, So this would be where the fair value gap is on the daily. So we have this candle, the Thursday candle, traded all the way through.
No, I'm looking at 15 minutes.
Okay.
But putting the if you look at it from 15 minutes, it's kind of.
This is, okay, so this is Wednesday. Okay, this is a Wednesday open. So let's go. I'm going to do.
You're on Thursday, but looking back.
Yeah. Okay, so I'm going to do, we have Globex, and then let's do, where are we? 9:30. Okay. So daily, and then let's play the overnight. Let's speed it up a little bit.
It's supposed to go down at the opening, like up and then down.
Okay, we have that one, and then I'm going to lower the speed so that we don't go too fast. Okay, that's the 9 o'clock, one more candle. Okay. So, okay. So you have, yeah, so we just came into the daily fair value gap. That's based, I'm going to change this to green so we can see that it's bullish, not bearish. Okay. So we came down here. So based on this, we are thinking because the daily is showing the fair value gap, that we would want to go to the upside for the upside targets. And once we open, we come up and it does push up. So that does hold true, but this does hold true on the fact that this fair value gap did hold true up to a point until it didn't, essentially. That's where you want to, like, you don't just take it because it's there. Right, because fair value gaps, we run through them, right? We balance, we run through them. We want to balance out the charts so that this one it's going to disappear when we take it out, right? So just having it there is not enough to be bullish. The structure is, for me, the structure is my most important. What I will look at. This can be there as a way of where we could possibly see like a big reaction. But if we don't get follow through on these candle highs, then I don't see this is invalidated essentially, right? You need that, it needs to follow through.
I mean,
And
I don't know, but I won't consider this fair value gap, the one you shaded the green,
mhm.
as a bullish sign. I would never.
Okay, well then
understood-
that's good because it's not, because it's
Yeah, I mean, I don't know. That's not a bullish sign at all.
okay. What was your, so what did you want to ask about
So
the,
now keep going, keep going.
okay.
I mean, you want to play it. So now, what are your targets?
Oh, what are my targets? Downside targets, or downside or upside? Based on the
Downside.
fact we're downside. Okay, so downside for like we're looking at this right here because that's the swing low, like the swing low right here. We want that because that is all of this. So this balance, all of this area would be balanced out if we go down here. So we want, if we are going to continue back down to take this target, we need to take out this level right here in order to get to this level right here that we are targeting for our on the weekly. So this would be one target, and intermediate targets would essentially be the wicks. I'm looking at the wicks on the 15-minute. So this is a swing. This is a swing. So these levels are the levels that you're like I'm marking out to see what the reaction is once we get to that level. Like, are we wicking or are we displacing? Are we pushing through? It needs to push through these levels if we're going to continue down. It can't just have wicking and just have a sort of like like a reaction. It needs to have a solid push. So let's play it and see what happens.
Okay, so you're looking for those wicks as targets.
Yeah.
I was thinking, like, those green beams, they have fair value gaps. It could be targets. Like, where you draw those lines on the wicks on the left side,
Mm-hmm.
there are a lot of fair value gaps there. Like right here, exactly.
Oh, okay, yeah. See, I don't. That's where I don't. The thing is, I don't. Fair value gaps are very. They can be tricky. If it needs, you have to have like a really good comfort level with them and really have a good understanding of where it is in terms of what you are wanting to do. So for instance, if we're trading down and then this wicks up, you would want to see, is it in confluence with the fair value gap? If you are using that as an additional in addition to what you're trading, like an added confluence. But in and of itself, it's not enough. Because if I turn on my fair value gap indicator, there's, which one are we going to? Like there's this one here, which it wicked into. There's, see, it's like it gets where you're like, okay, are we going to trade through it? Are we going to like wick it and then reverse? You know, like all of these levels are, it's you like you want to see the reaction, but if we are bearish, these are the levels that we need to, you want, like it should, price should go through essentially.
Okay. Yeah, but you see, it drew for you the one, the
Yeah, it
green
did.
one.
It did.
No, the green one on the left as
Yeah.
a target.
It's not, yeah, it's a target. It's not necessarily a target. It's an area where potentially there's an imbalance. So like ICT teaches, it's an area of imbalance where it wants to be balanced out. So when it means balanced out, the idea is to trade through it, not to wick it and reverse, right? When we're coming down, especially on a downtrend, we want to balance all of these out. We want these to disappear. That is the goal, to have it be balanced, is to take these levels, to take these green squares, they should no longer be there. We want to have those be gone, because then the chart, it's balanced.
Right.
Right? Okay. So, did that answer your question as far as targets and?
Yeah. So
Okay.
is that really going to cover those fair value gaps as targets, or the lines you draw, but not to the bottom one? It did not reach that one.
No, and that's where you think it could be, like that's a possible one, and then there's this little itty bitty one that you want to see if, like, okay, it doesn't want to get down there. So it's just basically you just do level to level.
Right.
If we get to that level, the next level is, what are we doing? Okay, went through this one. So then we're just, you see, if we're not taking out the swing high, are we going to take out the next level? And that's just, I believe this is the next day. Yeah, this is after Globex Open. So we got as far as here.
Yeah.
So yeah, that's why it's like you have these like intermediate levels to have a guideline along the way to show you where we need to get through in order to get to the next level.
Right.
All right. If nobody has any more questions, I do have to go. Hopefully that helped. And
I just have one quick question.
Yeah, go
You
ahead.
do it all through Apex? Is that the
I'm sorry?
eval? You do it through how do you get the eval count? Is Apex?
They have
No.
so many prop firms. There's Apex. There's Elite Trader Funding. If you DM me, I can give you a list of what they are and pros and cons of between pricing, between drawdowns. I mean, it's just like they're it's a huge business.
Okay, thank you.
Yeah.
Also, Dina, I don't know if you knew, but as of today, I'm sure you know because you are in their Discord. Elite Trader Funding now has a one-time fee.
Yeah. Yeah, I saw it pull up on my dashboard. I was like, ooh. I was like, Detective's going to be happy. He's been waiting for that.
How much? Do you know how much is it? Because I can't see the prices.
It depends on the
Roughly like 150-ish range.
Well, my diamond is like 255.
Oh, okay.
So it's an equivalent to how much the the evals are, and
In
so.
general, for the most part, like for the price and what you get in terms of compared to ETF and Apex, now the only difference remaining in ETF is their promotions, right? Where ETF rarely offers 65%, 70%. Apex sometimes goes down to 80 and sometimes 90. And then Apex has the first 25K is yours of profit versus Elite. You still keep 12K.
And yeah, I mean, I'm doing the top step one because I really like their rules and how they've set it up. They finally got rid of their 30% consistency, which was so annoying. But yeah, so now it's just 2 days to pass 50% consistency, and you're funded in 2 days.
Nice.
So yeah. So I'll let you know how it goes.
Yeah, I'll let you know.
Okay, guys. If you have any questions, DM me and I will, answer. And I'm gonna be on voice tomorrow. Today's Monday. Yeah. So Tuesday, I'm good. Wednesday, I'm taking the morning off. FOMC. I don't touch FOMC until after Powell speaks.
Also, as of questions, right? Like, don't hesitate to post questions in the beginner chat questions area. We're gonna change the emoji. Hopefully, I'm just trying to figure something out.
Yeah.
But it really helps other people, right? It becomes an easy resource to find back to. If you really want to be anonymous and if you want to keep it private, by all means, like our DMs are open.
Yeah.
But
But we love
just-
questions.
if something is general and you might think that it helps somebody else, then I just want to encourage you. We want to encourage you to post it there. That's all.
Yeah. And whatever question you have, whatever you're going through, guaranteed we've been there. Someone has been there, and most probably we have been there. So you are definitely not alone, for sure. Okay, guys, I'm going to sign off right now. Everybody have a wonderful, wonderful night. I will talk to you tomorrow morning.
Thank you, Dina.
You're
Thanks.
welcome. Bye, guys.
Thank you.
Thank you, Dina.